Good morning. My name is Renae Mendall. Here is my Instagram handle. I'm here to talk with you about finances today. I'm sure that when you saw this as the title, there was maybe a little bit inside of your stomach that thought, I don't really want to sit through a finance program because I'm not necessarily really in love with numbers. Maybe that was something that you could get away with when you worked for someone else. But having your own business changes everything. And the title of my program is called Success is Measured in Dollars. As a salon professional myself, I had been a salon owner for many years, and the things that I'm about to show you today was information that I never even had until years into my salon ownership. It may have made a big difference in my trajectory of being profitable as I moved through the early years of my salon ownership if I had had that information earlier on. So it's a passion of mine to share this information with you. One of the things that I know about myself was that when I first started in the industry, I would have rather been loved than been rich. I wanted lots of people in my chair, and I wanted everyone to tell me how much they loved what I did. And if you're like that, go ahead in the chat and put in me if you would rather be loved than be rich. So that's okay if you're an employee working for someone else. However, we have a new set of skills that any one of us who are salon owners need to do and learn how to manage as salon owners, because the financial side of our business is what is going to give us that monetary success. There may be questions as I go through my program today. That's why I added my Instagram handle at the bottom. If you have any questions that you would specifically like to ask me, go ahead and DM me, and I will answer those questions for you. While we go through the program today, one of the things that I want you to keep in mind is these 4 words that Matrix has as their mantra: think, believe, dream, and dare. Think is the first one. Think outside of the box a little bit. I'm sure as salon professionals, whatever part of the industry you're in, whether it's skincare, nail care, massage, hair care, even I've heard that some of the Salon Republic people have tattooing. Any one of those things, I'm sure you're very successful at the art of what you do. However, we need to think outside of the box in terms of adding the financial piece to what we know. So please allow me to share some things with you that you'll be able to add to all of the success that you've had from the technical side of what you do. The second one is to believe. I said it before. So many of us think that we're not good with numbers, and I want you to just put that aside. Believe in yourself, and this is all very simple math, and I will take you through steps to make it second nature for you as you learn how to track and measure your financial success over time. And then dream. You know, right now, you may be in a situation where what you dreamed your studio success was going to be like from a financial perspective is way different than the reality. I'm here to share some real simple tips with you that may combine those and even exceed your highest dreams and expectations. And then the fourth is to dare to do something differently. I'm going to suggest that you start tracking some of your financial numbers over your weekly performance and monthly performance in order to be able to recognize and understand areas where you may be able to improve financially, and even get a sense of where you stand right now to understand how you can move forward and be a salon professional who is financially successful. So what we're going to start with is a little bit of vocabulary. When we talk with accountants or anyone in the financial business, they will use certain words. And I want you to be comfortable and aware of what those words mean. So I'm going to bring up a flip chart page here. So essentially, whether it is our personal finances or how we manage and run our business, there are two sides to the equation. There's the income side, the money that comes in on a daily basis from services and the sales of home care product. And let me just take a moment and talk about that. If you're referring to it from a financial professional's perspective, it's called retail. When you talk with your clients or your guests that come in to visit you, oftentimes I like to use the word home care or continuing care because that kind of gives you the link from what you're doing inside of your studio to what they may need to do at home to continue the good results that you want them to have. So, as we're talking from a financial perspective, we're going to call the services that are provided service and the products that they go out the door with retail. Then on the other side of that equation, we have to pay for that retail product. We have to pay for our space. We have to pay for all of the things that we're going to be needing in order to be able to service our guests. And those are our expenses. And there are two types of expenses that we deal with in a business. One is variable expenses. The other is fixed expenses. So when I talk about variable expenses, I'm referring to things that will change as your dollars that come in through service or retail change. Let's say, for example, if you in one day brought in $500 in services, you're going to have variable expenses that relate to that $500. If on a day that you only do $250, your variable expenses will be lower because it always relates to your service sales. Fixed costs are different. Fixed costs are something that you will add that will not change throughout any given period. I know that in studios, most times you're charged your rent on a weekly basis. So these would be fixed costs on a weekly basis. Some of the costs that you have may be monthly costs, like your cell phone would be a monthly cost. And in most cases, things like the cell phone and the rent are not going to change based upon the amount of money that you bring in. So we have income that's coming in through service and retail, and we have our expenses. The variable expenses will be the changeable ones. The fixed expenses will stay the same. So I want to reference the correlation between the income and the variable expenses to give you a little bit of more of a foundation on that. So here we have the relationship between our income that's coming in. We talked about service and we talked about retail, and our variable expenses that are things like costs of goods for service and costs of good for retail. So costs of goods is something that in service might be the color that you use. It might be conditioner and shampoo that you use at the back bar. If you are doing massage, it would be some of the oils that you use, even the aromatherapy that might be in the room. And if you're doing skincare, it's going to be the products that you'll use during the course of doing skincare. Generally, we want our service dollars to be 80% of our total income. And we want our retail dollars to be 20% of our total income. Reason that we break this down in this manner is because in order for your service dollars to go up, you're going to need to do one of two things. You're going to need to increase your prices or add more people through the door. Whereas your retail dollars will only change by opening your mouth. If you make a suggestion to your clients and they take you up on those suggestions, that's going to be home care that will walk out the door. And whatever your fixed number of clients that come in, and let's say in a week's period, I'm just going to pull out a number and say you had 20 clients in a week. That was 20 opportunities to sell retail to those clients that were already a captive audience in your salon. You don't have to go to social media and increase that number of 20 clients. And and another thing about the retail inside of a studio, the amount of money that you can generate on retail is way more than it ever would have been when you were working as a stylist for someone else. So let's actually put some numbers to this. Service. I'll just use some real simple numbers. If I did $100 in service, my cost of goods for service is going to be 10% of that. So my cost of goods on $100 of service is going to be $10. Why is that important? Well, it's important because in, let's say, a week's time, when you had those 20 clients, you add up your service dollars at the end of that week, and you roughly can measure that against what you spent on the products to make sure your guidelines are within the standards of 10% of service sales. Now, why might that not happen? Maybe the color that you purchase is a higher price color, and the service dollars that you're charging using that higher price color isn't high enough to make this ratio of 10% of the service dollars equal. Maybe you're, heaven forbid, having some color go down the drain, over measuring. These are all things that might make this ratio go askew a little bit. And we're definitely going to talk more about this later on in the program. But this is the concept. For every $100, $10 is going to go into your budget pool for services. That may be helpful for you the following week, because if, for example, you had a certain dollar number of services in week one, you multiplied by that 10%, it will give you a budget so that you understand how much money you can spend in week two based upon the services that you had done in week one. It's not a direct correlation like some of the things I'm going to show you, but at least it gives you a projection idea. And over time, you will be able to use that projection idea to stay within the budget guidelines that we're going to be talking about. So it allows you to budget for it. Let's talk a little bit about retail. We want out of your total dollars to come in for retail to be 20% of that. Most salons these days, commission salons out there, large salons, small salons, are doing between 6 and 8% of their total sales are coming in from retail. We as an industry have a long way to go to increase to our maximum potential for the amount of money that we can make in retail. The wonderful thing about it for you, as I mentioned before, is because you are your own boss and your own owner, that those retail dollars will come to you at 50%. So let's again take our $100 that we sold in retail. The cost of that is going to be $50. So we brought in $100 on our retail. It costs us $50 to bring that product in because we generally will buy it for $1 and sell it for $2. If it's a $15 product, we're going to sell it to our clients for $30. And what that allows you to do then is get a 50% profit. So in this $100, I make and put in my pocket $50. This is a portion that we're going to talk more about in the budget guidelines. This is a portion that has so many opportunities available for you. You could even pay your weekly rent if you're really good at selling your retail and having clients go home with it. So those are the two pieces that create the relationship between income and variable costs. Next, we're going to talk about expenses. So here we said that from our income perspective, 80% of the money is coming in from service, 20% of the money we would like to see come in from retail, but it's going to give us a bottom line figure for the amount of money that has come in during a given period of time, like I mentioned before, during a week or a month. Here breaks down the variable costs that I had mentioned before for the service dollars and the fixed cost percentages on any given period. So when we talk about the expenses, it could be weekly expenses measured against weekly sales. It could be monthly expenses measured against monthly sales. And regardless of what segment of the beauty industry you're in, because these are numbers and they're related to budget guidelines from accounting, it really doesn't matter at all whether you're skincare, nail care, massage, or hair care. It's all going to be the same types of percentages. So let's talk about our variable costs. Costs of goods, and I have it down here as COG. Oftentimes with financial people, you'll hear them refer to it that way. So my costs of goods should be 10% of my total, of my service sales. My labor costs. So in the industry right now, the average cost for a service provider working for someone else is that you keep 50% if you're an employee of the money, and the owner takes 50% to use to pay all of these other things that are on the list. And it's quite possible, because I've heard this so many times, that when a salon professional decides to go out on their own, they feel like they're going to be able to keep that additional 50% along with their own 50% and cut out that middleman of the salon owner. For those of you who have been in ownership for any period of time, I imagine you know now that that's actually not the case. And we're going to take these percentages and turn them into numbers so that you can actually see how this looks when you're measuring and tracking your income and your expenses over any given period of time. So employment tax, I want to make a little mention about that. We're taking a minimum amount that you should take out of your income to designate it as your labor costs. And that will be 50%. Over and above that, then, are your employment taxes, because you are now, as a self-employed or a sub-S corporation or an LLC, you are both the service provider and the business owner. So you're going to have to take care of both sides of things like Social Security and Medicare. That's money, as you know, that has to go into the government on a quarterly basis to make sure that you're provided for in your retirement. And one of the things that I want to say about this is, please do not skimp on this. It may be really tempting at this point in your 20s or 30s or 40s to say, I'm not going to claim all the money I have coming in so that I don't have to pay as much into my Social Security fund. Yet that is vitally important money for you when you reach retirement age. So please don't skimp on this. And I'm going to come back to this after we talk about the fixed costs as well, because this is the area that sometimes gets squeezed when all of these other things need to be paid for and you don't have the money to do it. So down here are the fixed costs. They're the ones that I said were things that you have to pay that you don't really have change over any given period. So your rent should be at a ratio of 25% of your total income. Your administration costs. So these are going to be things like administration costs might be your cell phone. It might be if you have any web services. It might be if you use an accountant or an attorney to do any of the things that you do related to running the business. Those are going to be things that would be under administrative costs. And we have designated 5% of total income in order to be able to put that money toward your administrative costs. And then miscellaneous is last. So miscellaneous might be the sorts of things that you may have the temptation to go to the store and pick up on a regular basis. Your paper products, your anything that would be non-service related in the salon that you might go and pick up for the comfort of yourself or the comfort of your guests who are coming in. Those would be under the miscellaneous costs, and they are roughly at 5%. So what I have set out here is a way for you to determine if your expenses are in line currently with the amount of income that you have coming into the salon, regardless of how that income is coming in currently. But I hope to give you enough reasons to start doing retail that you will eventually get to this percentage of 80% service and 20% retail. And while we're talking about that, there's just one little side note that I want to mention. If you are a massage therapist, I've often heard massage therapists say, well, I don't have retail products to sell, but oh, yes, you do, because you could sell essential oils, or you could sell dietary supplements to calm and relax someone, even if they are related to muscle tension, that you could suggest things like that for your clients to use in between their visits to you. And those things have a pretty amazing markup that for a segment of our industry in the past didn't really have opportunities for being able to retail. I do believe that there are a lot of things available for a massage therapist to retail. The luckiest is someone who does skincare. An esthetician will sell $400 worth of product to one client walking through the door, because after they've finished with their peel or their facial or whatever it was, believe me, that person, man or woman, wants those results to continue. And it's really through that home care or continuing care that those results will continue. So lucky you, estheticians, you've got that captive audience, and you sort of tie into their vanity. Not that hair doesn't, but I do think that, as I've seen it, skincare specialists have an easier time selling multiple products to a client than a hair care specialist will, and at a far higher price for those products. Okay, so here we are with our fixed costs. And I said I wanted to come back to this 50%. We thought when we left employment from someone else that this could be up in 70, 80%. My hope is that for any of you who are now your own boss, you're at least at 50%. But there are times that, maybe you are just building your clientele, or heaven forbid, through COVID, there were times that we still had the rent to pay, but there were fewer people walking through the door. The area that is going to suffer most, because we still have to pay our supplier or the store for our costs, we still have to pay the government for our employment taxes, we still have to pay the rent for our space and our admin and miscellaneous. This percentage is the one that is going to suffer the most if we don't have everything in alignment. So what I'm going to do now is show you what that alignment looks like, because this is extremely important information for us to be able to keep in mind with regard to what we're bringing in on a week or a month. Let me move this over here. Okay, so these are our budget guidelines. You can see, looks like it's a little sideways, and I'm OCD, so I need to fix this. Okay, budget guidelines. You see that we have our income, we have our expenses. Under our expenses, we have variable expenses and we have fixed expenses. So what we're going to do now is plug numbers into this. And what I'm about to share with you is an extremely important part of measuring and tracking what you're going to be watching from a financial perspective in your salon company. It all starts with rent. So everything with regard to the amount of income that you need is generated from the nucleus of rent. That's aside from what we take home, which, as I just mentioned, is variable. The rent is our biggest fixed expense. And so whatever the rent is, if you multiply that number times 4, that will give you what needs to be here as your total income amount. So in this case, I'm going to again use simple math so it'll be easy to understand. We are going to say that your weekly rent is $500. I imagine there are some of you that weekly rent is a low number, and there may be some that are on this YouTube that number is higher. But just from a standpoint of making the number simple, we're going to say rent is a fixed cost of $500. So I mentioned that we multiply rent by 4. So this rent number times 4 will tell you how much money you need to have come in the same period that this rent relates to. So if this rent is weekly, then the number that I'm going to put up as our total income needs to be a weekly amount. And in this case, because our rent is $500, our weekly total service amount needs to be $2,000. Now, why does it need to be $2,000? Well, when you look over here at our fixed cost, our rent is 25% as one of our fixed costs. 25% of income is going toward rent. So rent times 4 at 25% will equal the 100% of the money that we have coming in for our total income for that same period. Now over here, I mentioned that we want this money to come in 80% of it from service, 20% of it from retail. So I'm going to break out the numbers of 1,600 as service and 400 as retail. And this is in a week, 1 week's time. So 1,600 will come to us in service. Oh, I'm out of the frame. 400 will come to us in retail sales, and $2,000 will be what we want coming in over that same period that we're paying our $500 in rent. So then let's talk about our variable costs. We mentioned that out of this service amount of $1,600, 10% of it was going to be going toward the cost of goods for service. Now, those of you who are a little quicker with your money, you already know what the number is that needs to go in there, and good for you. That would be $160. 10% of 1,600 is $160. When I calculate that $160, I know that I can use that as my budget for what I'm going to spend for my products the next week. Now, that $160 doesn't necessarily have to be used in a certain way. It's just the amount of money when you add up all the products that you want to purchase. This is the number you don't want to go over. The next is our labor costs. That's the amount of money that we're going to pay ourselves for the time that we are working in the salon. And one little call out that I want to make about that is these budget guidelines are for a studio with one person. If you share the studio with someone, then each of you should be separating things like your cost of goods, separate things like your cell charges. The only thing that you would combine is the amount that each of you pay. I'm assuming half by one and half by the other for your rent amount. So if your rent is $500 and you are sharing a studio with someone else, this number would be $250 for you yourself. So our labor costs, and what I would love to see you do is when you calculate your labor costs as 50% of your service dollars, I would love to see you put that labor costs into your checking, into a separate personal checking account, as though you're giving yourself a check. Because if it's commingled in with everything else and you're just taking money out to pay for personal things, you're not really able to recognize if you've taken out enough money or too much money to use for those personal things. So my suggestion is you're going to have your business checking account and then have a personal checking account and do a transfer at the end of each week that would equal what 50% of your service sales were. And in this case, those of you who know math, it is going to be $800 as your labor costs. Now, I mentioned before about what we do for our employment taxes. There are two things other than there's one thing other than the payment of your Social Security and Medicare and your unemployment taxes that you need to as an individual. There's also making sure that you're paying for taxes on tips. And I know that at one period of time, and I'm not sure if it's happening right now, but there was a very big push on the Internal Revenue Service that we were targeted as an industry, the beauty industry, for not paying taxes on tips. They've gone through the restaurant industry. They've gone through many other industries that are tip industries. And we happen to be kind of the target of the day, let's say. So how much do you pay? How much do you calculate for your tips? So I'm going to give you just a little rule of thumb. When you calculate what your service dollars are, go ahead and times that by 8%. And that would be the amount, whatever that dollar number is, 1,600 times 8% would be what you would pay taxes on from a tip perspective. That at least keeps you safe from someone coming after you and requiring you to pay back tips. The only other option would be if you post and truly follow through with with a no tipping policy. There are a lot of studios and salon companies that are going to a no tipping policy and increasing the service dollars that they charge to any of their clients coming in to make up for whatever percentage of tip and kind of build it into the cost of the service. And then therefore, since it's a cost of a service, that's going to be calculated and picked up as a function of the income that any one of the stylists or service providers has, and will be picked up that way and not separately as a tip number. So what we calculate is 5% for your additional employment taxes. And in this case, that looks like $40. So here we have our variable costs for service, labor, and employment tax that comes up to $1,000. And we have $2,000 that we've brought in that period of time. So let's talk about the fixed costs. We know that our fixed cost is $500. We also know that our admin percent is 5%. So that's going to turn into $40. And then we also know that our miscellaneous is 5%, and that will turn into another $40. When we add all of this up, then here we said we have 1,000, 1,500, and I was talking about this as 1,500, and it's all calculated on our service sales. So let's just not think about the 2,000 right now because we're not talking about the retail. Let's only talk about our service sales. So here we have 1,000. Here we have 500. Here we have an additional 800. So when I look at my expenses related to the amount of money that I had come in on service, I have $20 profit. This $20 is the only money that I've made as an owner over and above what I'm paying myself at a 50% wage. It's a very low number. And when you look at it as relation to the full income that we were looking for, it's 1%. 1% is what you get at the bottom when all of your budget guidelines are in line the way they are right now. The thing that makes the difference for us is oftentimes retail. And retail is what we often felt like we were a little uncomfortable offering inside of the salon prior to being an owner. I'm hoping that I give you enough reasons with this information to have you rethink about retail. So I want to tell you a little story. I'm going to bring up one of my flip charts over here. It says, be an advisor. So my story is I moved from Florida to New Jersey. And New Jersey is near where I had grown up and have a very close friend who is an interior designer. And I was living in the New Jersey area and put some of my things in storage, but there were bigger furniture pieces that I decided that I didn't want to keep, and I was not going to put them in storage. So I knew that when I returned to New Jersey, I was going to need to buy a new sofa. I reached out to my interior designer friend, and we made a plan for us to go to the showroom store so that she could show me a few options of a sofa that she might recommend for me. She knew what my house looked like because when I went to Florida, I only rented it and she had been there prior. She knew what furniture I already had, and she knew me and knew my tastes. So I felt confident that she was going to be a really good advisor for me about the sofa that I wanted to buy coming back into my home. Well, when I pulled into the parking lot, she came out from the showroom store. She had already been in there. She scoped around. She was looking at different types of styles, material patterns, things like that. And so when we went inside, she showed me this living room setting. And she said, this sofa is going to be perfect for you. It matches you, it matches the house, it matches some of the other pieces that you already have. It's going to seamlessly move into the environment that you have. And in addition to that, this coffee table, because it has a glass top, is going to really open up the room for you. And those end tables that are on either side of the sofa and that lamp over there would really make a great living room setting for you inside of your new house. She was being my advisor, and she had no stake in the game other than that she just wanted to share her expertise with me. She wasn't going to really make anything, I don't think, from the opportunity that she had in sharing her ideas from a financial perspective. However, maybe she was. I don't know. There might have been in that particular showroom a percentage that came to the designer for any products that were sold in that showroom, not unlike what we do. Yet I never felt like I was being sold. It was always really more about, I'm here to share my professional expertise with you, and it is disconnected from whether you purchase what I'm suggesting or you don't. I feel, and this was what we talked about later, she said, I feel like my role is to share that information. And your role is to decide whether you, in fact, want to take advantage of it or not. If I haven't done my job correctly, then you may be missing out on opportunities. So here's what I've put just below be an advisor. Suggest ways to help clients' hair look and feel better. One of the things that happens for us in the hair industry right now, and I believe it's no different in skincare, massage, or nails, we don't always take the opportunity to share what can help the client's hair look and feel better between their visits, or their skin look and feel better between their visits, or the tightness in my shoulders feel better between visits. So I would challenge you, as I had mentioned before, take the advice to try something different than you've ever tried before. Go ahead and make those suggestions. Make those suggestions to your client, regardless of whether you think they're going to take advantage of them or not. Because the bottom line is that 50% profit that we talked about before. And over here, it would make the difference between our retail sales being 0 or our retail sales being 400. And if our retail sales were 400, you notice I didn't calculate anything in here in my costs, and they would be in variable costs. I didn't calculate anything for the cost of retail. So if we added a $200 charge here on this $400, because it's buy for $1, sell for $2, that $200 is going to drop directly down to the bottom line. And instead of $20 profit in that period, it's going to be $220 of profit in that period. And when we're talking about what our rent amount is, you've just put another $200 into your pocket because you've been able to decrease your $500 rent by the $200 that you used in, or that you kept in your retail sales. Very, very important information. So I want to just remind you of some of the things that we've talked about today and how important making sure that you're doing your tracking to measure, in fact, how careful you are in your purchases and in your expenses to make sure that you have a bottom line profit or are at least breaking even. So we're going to call it staying profitable. First thing that I would want you to do is begin to, on a weekly basis, use this rent times 4 calculation. so that you'll be able to understand how everything falls in line in relation to your rent. So calculate your need through your rent here, and then do a simple budget guideline. If you haven't already taken a screenshot or written each of these things down originally, I would highly recommend you do that, because after we get off this call, you will be able to review my program as a video. However, I think that in doing that, it may be helpful for you to have this information in front of you so that you can be following along as you're watching it. So we'll want to take our rent times 4 to determine what we want as our full income amount. And then you're going to take your daily sales, and if you have retail, you'll split out your service sales and your retail sales so that you can determine what your cost of goods are going to be on both. But you will definitely need this number, your total income amount, and then that will be the number that you'll use to calculate all of this other stuff down here. So here, add up your income, and then add up your expenses and measure them by the same period. So if your rent is a weekly rent, measure your sales and your expenses in a weekly amount. And if your rent is a monthly amount, measure everything that's being purchased and done in that same period through a monthly amount. There was something I was going to say about that, and I just lost my train of thought. So give me a moment, and I'm sure it will come back to me. And then down here, I mentioned about remembering to file your estimated taxes quarterly, because it is a responsibility of us as business owners to make sure that we're providing the government with an accounting of what we've estimated or made through each of the 4 quarters of the year, so that then when we go to do our income taxes at the end of the year, that income has already been submitted to the government. And if we have to add a little to it, it's going to only be a little. And if we are able to get a refund on our return, that will be something that will already be set up through your quarterly deposits. So how do you give yourself a raise? It is really important that, let me move this because this is about the advisor. It is really important that you become that advisor. There are really only 2 ways that you're going to be able to increase your income in the salon. You're going to increase your income by increasing your prices. If you find that doing one of these is it makes you realize that maybe you don't have enough money coming in for you to still be able to have that 50% commission in your personal checking account. So you could raise your prices. And one thing that I want to share about that is right now, statistically, we're finding, research tells us that you can raise your prices between 5 and 10%, and you will not lose any clients. If you raise prices between 5 and 10%, the thing that might happen is that some of those clients that are coming in 4 weeks might stretch to 6 weeks. Or some of those clients that are coming in 6 weeks might stretch to 8 weeks. Or some of those clients that are coming in once every 3 months might go once every 6 months. It doesn't matter, because if they are stretching their appointments, you're not being held hostage to the price that you charge that client that's too low and the time that they're taking up in your book. If they stretch their appointments, you're going to charge them the higher fee, and they will be happy because it will still measure in with their budget. They just won't be able to come in as often. However, that block that it opens up in your book will give you the opportunity to bring a whole new client into the salon and charge them at the higher price, which is going to obviously increase what your revenue is. Sorry, what your income is. If you're just feeling like, well, I just recently raised my prices, I don't feel really comfortable raising them again. I, got a backlash when I did it, and I'm just not feeling the need to do that right now. Then it's all going to come from here. It's all going to come from you becoming an advisor to the people who sit in your chair or lie on your bed, and be there to be able to explain to them what it is they need to use and do at home in order to be able to extend your results. And in addition to that, the hair feeling better. One of the things that manufacturers, and I didn't mention it, but I am an educator for Matrix. Matrix especially has gone the extra mile through their Total Results retail product and their Total Results professional product for in salon to give us as hairdressers the tools to be able to make clients' hair feel amazing. And in addition to the treatments that they've provided for us, they've also put the bonder. Some companies sell bonders that are add-ons that you have to put into the product. Now Matrix has put bonders right into our color and our lighteners to give the client the benefit of awesome feeling and looking hair without that additional add-in bonder. The advantage to you is that it's already there. The advantage to you is that it does not take an additional 10 minutes for step 2. So if you are not familiar with the hair color products in Matrix, or if you're not familiar with Total Results in Matrix, I would suggest that you take a look at them in the store, because they really are an awesome results producing product that you could use in the salon. And the price point on it is really awesome. And their permanent hair color is 3 ounces, not 2 ounces. So you're saving money on the additional amount of product that you're receiving. So you will be able to add some of these treatments, or maybe upcharge for your color if it's got a bonder in it. And all of those things are going to be the things that will, without raising prices, will increase the amount of money that you have coming into the salon. Now, how much retail do you need to sell to get to that 20% amount? And here is the calculation for that. If you sell 3 or 4 products per day, that will equal roughly about $400 in income on a weekly basis. And I base this on a product that sold to the consumer for $25. So it would be a product that you're purchasing at the store for $12.50. And here is where I was mentioning that once we have that income of $400, the cost of goods for our retail product is going to be $200, and it will be the $200 that goes directly to the bottom line, in addition to this $20 that you would have as an actual profit. So I'm going to pull this down because some of you may have come into the program a little later, and one of the things that I promised in the beginning was to give you the opportunity to reach out to me if you have any questions. And DM me. This is my Instagram handle. I'll answer any specific questions that you may have related to this budget guidelines, the financial pieces, the cost of doing business, how inventory percentages relate to sales because of the variable costs of product, and most importantly, these budget guidelines, because no matter what your dollars look like, these budget guidelines and the percentages that come in from variable costs and fixed costs are are going to be as a relationship to the amount of revenue that you have coming in. And this is kind of like your Bible. This is the guidelines to making sure that you remain profitable. So it's called Success is Measured in Dollars. I know that our heart wants us to be friends with all of our clients and have them love us. And what I'm saying is that's all okay. Why can't we be both? Why can't we be friends to our clients and still have a successful business so that we can be there to serve them year after year after year? And the only thing that is going to make that happen is to dare to do something different. So what I'm going to ask you to do is DM me with what it is that you dared to do differently after seeing this program and using the information that I've shared with you today to change the way you see yourself in your business and change the way you measure your success in your business. This is Renae Mendall, and I am an educator for Matrix, and I am thrilled that you allowed me to share this information with you today. Thank you very much, and have a great rest of your day.